Look, there are pockets. There are pockets of irrationality here. I would say, for the most part, that the market action we have seen has been rational in that the market is rewarding companies that have improved their businesses as a result of the unusual times that we're in. And it's the laundry list of the names that you just talked about: big box stores and tech and software and anything that is allowing people to work efficiently from home. So that's not entirely crazy. The other thing that's really interesting is that people try to make the analogy to the late 90s here. What's fundamentally different here is that the accounting today is much healthier. These are all GAAP earnings that we're getting. We're not getting one-offs. We're not getting non-GAAP earnings. We're getting real earnings. And so we really can compare apples to apples and oranges to oranges here. And for that, I really think there's more of a substance in the companies, in their performance. Obviously, there are places that are a little bit inexplicable right now for performance. And if investors have some of those companies, I think it's probably okay to shave some here and invest in other areas. But for the most part, this is not irrational.
Alicia, hi, this is Christine. You make a very good case for the optimism that you're talking about. But do you worry about unemployment? Employment, we know so far, has been lagging the recovery. We are getting their jobs data on Friday, the August jobs payroll. Do you think the market could lose some steam as a result if we don't get that right number?
Well, that's a really interesting question. It's sort of like you can't lose here. Heads I win, tails you lose, because the market's looking for 1.4 million jobs added on Friday, and the unemployment rate just to dip below 10% at 9.8%. If it's much better than that, the market will celebrate it. If it's much worse than that, it will be an impetus for there to finally be a second huge fiscal deal in Congress. I think to the extent that the data are better than expected, it'll be very hard for the Republicans to come to the table here. If it's worse, they probably will. And I'll just remind you that despite the fact that we had fiscal tightening in the U.S. in August, as those extra unemployment benefits rolled off, we still had the market rally, and that's because the savings rate is so high and the income replacement has been so extraordinary thus far. It can keep us going for a couple of months, not much more than that, but the spending can continue for probably another month.
Yet, Alicia, there are concerns that in this environment, we may not get an agreement on this fiscal stimulus package. I think hopes for the stimulus were another factor behind the market's gains yesterday. But just in the last few minutes or so, we have heard from U.S. House Speaker Pelosi saying that after a phone call with Treasury Secretary Mnuchin, that Democrats in the White House have serious differences understanding the gravity of the coronavirus relief situation. That doesn't sound too optimistic to me, that either side is willing to come together anytime soon, at least in the near term. Does that worry you?
Look, it does worry me because I do think we need another large fiscal package, certainly by the end of September. I'll say this, the parties have come much closer. We started with $3 trillion for the Democrats and $1 trillion to the White House. We're now at $2 trillion for the Democrats and $1.3 trillion for the White House. So the gap is smaller, and the gap really is not so much on the unemployment side, but it's really on the aid to states. And so they're really, the big discussion and the sticking point is, what do the states need to get through this? How much of it is due to the coronavirus, and how much of this is just due to poor finances? And the Republicans and the administration don't want to finance bad finances. So that's where the sticking point is. And I do think that number on Friday will be an impetus one way or the other.